Hey everyone, welcome to our Silver Hill Funding webinar. We're so glad you could join us today for our first webinar since Silver Hill resumed commercial loan originations earlier this month. It's a very exciting time for us, hopefully for you as well. We can't wait to get right into it and tell you about the program, tell you how we can close loans together again. My name is Zach North. I'm the marketing director for Silver Hill. I'm joined by Juan Barcelo, our head of sales. So I'll kick it off and over to Juan in 1 second. I just want to let you know that our question pane is available. So throughout the presentation, if you have questions, just write them right in the pane, and I'll try to get as many of them over to Juan as possible. He'll answer those questions toward the end of our presentation. And the last thing I'll say is that this presentation will be available afterward. We'll email it to you, the email link with the recording, so you can watch it again at your leisure. So Juan, I'll turn it over to you.
Okay, Zach, thank you very much, and welcome to you and everyone else on the webinar today. Certainly is great to be back in the saddle, as they say, after a 6 to 7 month hiatus. And it's been a long year for everyone really in the world already. So we're real happy that we're back to business, and we're looking for new deals, and we're looking to help brokers, either continue to make money or to start to make money after, we went away for a little bit. So with that being said, we'll go right into the presentation. Again, as Zach mentioned, if you have questions, feel free to ask, and then we'll get back to you after the webinar. I'll probably have one of our reps follow up with you and answer any questions you may have. Okay, so let's get started. So that is me, VP, National Sales Manager, Head of Sales for Silver Hill Funding, and that is Zach. And we've been doing these for probably about 3 years already. We used to do one every month until we stopped. So typical format, if you've joined us before, very similar to what you've seen already. So we're going to talk about some commercial lending trends in 2020 in the small balance space, some of our new program parameters. We have changed our guidelines to adapt to the new, macro forces that are out there. We're going to talk about underwriting and other operational processes that we've changed. And the idea there is to obviously improve, become more efficient and more automated throughout our processes. And finally, we'll show you how to get started, who you need to talk to. We have a smaller team of salespeople coming back out of the gate, and so I want to make sure that you guys know who to talk to going forward. So it's a new day. What does this mean for you? Most of you are probably commercial brokers. Some of you may be both commercial residential. Some of you may be hard money lenders. So let's talk about, what it means for you, what our products mean as a potential source of revenue for you to diversify or to get back cranking up. In the last week and a half, 2 weeks, I've been talking to different brokers. Some of them were able to stay open through the pandemic, during the summer, doing bridge lending and SBA lending. Some of them switched to being, SBA, PPP lenders for a little while, accommodating some of those loans. Some folks just shut down and have been waiting to come back. So we know that several lenders in our space went away for one reason or the other. Only a few have come back, and so there are less players in the space as far as capital goes, and so we're happy to be back to that. We feel we're one of the few that have the kind of offering that we have in the space, which is a small balance commercial space. So we simplified our products. We're basically just doing a commercial program, which is commercial real estate, and that's your typical 5+ unit multifamilies, mixed use, retail, warehouse, office, etc. And then we have our 1 to 4 unit SFR investor program. Okay, for CRE loans, we are only doing full doc loans these days. We will not be doing the streamline and light doc that we did before. Okay. You know, because of what's happened this year, I think, you know, even with investor properties or owner-occupied business properties, we've seen cash flow issues, right? I mean, some folks had to close down completely. Other folks experience a lot less revenue. And so debt service coverage ratio is what really we're going to focus on going forward. We want to see how well that business or that investment property, you know, fared during the worst of the pandemic. Many properties have come back. Investment properties performed better than owner-occupied properties for the market, and so the stress this time will be around, not so much around FICO and LTV, but more around debt service and what really income is there for that property. And finally, streamlined processes. We have more automation coming out of the gate. We have a portal, a doc portal to upload documents with loans and processing. So we'll talk about that as well. What hasn't changed? We're still protecting our brokers. You know, our brokers can still make a considerable amount of revenue using our program. There's very little capital sources out there, so we feel we are a good option and one of the few options actually for this kind of commercial property and 1-to-4 financing. Closing certainty, you know, we're going to be focused on debt service coverage, but we want to close loans. Okay, we have an unlimited appetite for, you know, stabilized CRE and SFR investment property. You know, we manage our own funds. You know, we're not necessarily subject to what Wall Street is doing. And so it's just a matter of, you know, the market, what the market looks like and how ready we were. So we're finally ready to you know, build assets again for our hedge funds. And so certainty of closing, certainty of execution is going to be there again as it was before earlier this year. As far as team structure and leadership, we brought back the same leadership team, albeit a smaller group of people, and the idea is to become more automated and to have less touches on each loan.
Hey Juan,
yeah.
Before we go further, do you think I could launch our first poll question?
Oh, perfect.
All right, let me launch our first poll question here. I am launching it here. So for this, as Juan said, we kind of want to get a sense of the room here. As you might imagine, this is far and away the largest crowd we've ever had in the webinar. So we're interested to see what you've been able to do, what you've been up to in the time since you've been away. So we'll give you a few seconds to answer before I kick it back to Juan here. Okay, Juan, I'll just give it a second or two more. I still see people filling it out. Okay, Juan, we're at about 55% yes. So we've got about half the audience here that has been able to do this type of business or something similar, and half that has not. So I think regardless, a good crowd here to listen to what you have to say. Let me close the poll right now and let you get back to it. There you go.
Well, certainly that's something good to hear. I'm glad that many of you continue to, you know, work in the business and, you know, kind of figure it out. I know that there were, you know, minimal capital sources for a while, but, you know, I'm certainly happy that, you know, most of you on this call especially were able to hang in there and make it happen. Okay. So let's talk about our program. And what's changed. You know, really, the commercial program is now just really a full doc program. This is part of our product sheet. Really, if you've received one already from your rep, you will be receiving one soon once you talk to them. But the idea is we have our commercial program, $100,000 to $2 million. We're only doing 5-year ARM and a 30-year fix. Our more popular product is a 30-year fix. People really like doing that. And then LTV. We have adjusted LTVs. Previously we went up to 80%. Right now we're doing up to 75% for loans less than 500,000, and up to 70% for loans greater than 500,000. And it's the same for both 1 to 4 investors. Now the big difference is the minimum debt service. For our commercial properties, we're still looking at 1.15 and 1.2. And for our 1 to 4 investor program is 1.0, which is basically the same as it was before. Now, as far as debt service, we'll talk a little bit later about some of the nuances to that, but the bottom line is that those are the minimums, okay? Stabilization requirements are the same as they were in early this year, in March when we stopped lending, so that hasn't changed. Underwriting method is still also the same. We really look at, while we say global debt service coverage on owner-occupied, we're really looking at the business. We really want to understand what the business has been able to do, especially this year. So we're going to be heavily relying on, year-to-date financials, P&Ls, current balance sheets, current business debt, and then we'll get tax returns for the last 2 years to understand trends. Is this year looking like the last 2 years? Is it going up? Is it going down? Does it make sense what happened? So for the owner-occupied stuff, that's what we'll be doing. Investor property debt service coverage still remains the same, and also the same for the 1 to 4 program. Okay, our prepayment fees are unchanged, all the same. We have 3 different options, from a 5-year to a declining 5. Okay. Finally, documentation. We're just only doing our full doc program, whereas before we were doing a light doc and we were doing a streamline. Okay, so this time around we're only doing full doc. Okay, and by the way, about 35 to 40% of our business in March and before was full doc anyways. So it's not much of a change for what we were doing before. The 1 to 4 program is still no tax returns required. We'll use leases and current income in place, or we'll use market rents on the appraisal. So those are very easy to submit. We basically need an application and a tri-merge credit report and the leases. If you don't have leases, we'll take the deal without the leases and use market rents on the back end. So the 1 to 4 program is still very simple as far as from a documentation standpoint. The commercial program is where we're going to do only full doc. So some general guidelines. We still want to see 6 months of reserves verified throughout the process. Okay. Last time in March, we were looking for 6 months reserves on a purchase and rate term and 3 months on a cash out. Now it's all 6 months. Buy downs, we still do up to 2 points buy down at a cost of 3/8 to the rate for each point. Our caps and floors are the same. 216. Okay. Our broker compensation has changed. Before we were allowing up to 3 points in origination and up to 2 points in yield spread. Due to margins and due to what's happened in the market, we are adjusting that to max of 2 points on the front and max of 1 point yield spread on the back. Our yield spread adjustment is still only 3/8. You have several lenders out there that charge half a point to the rate for 1 point in yield spread. Okay. Ineligible properties. Really, it's all the same stuff. The only 2 that we took out is, for obvious reasons, restaurant bars and daycare centers. Those 2 have not done well during the pandemic, as you would imagine. And so we are not currently lending on those. The list of other ones that are there is below. Same as we were doing before, so really no different for those. And then on the left, the eligible properties, what we're still doing, multifamily, mixed use, retail, warehouse, self-storage, office, light industrial, automotive, and mobile home parks. Okay, so we still lend on a wide variety of commercial property. Okay, and our ineligible properties really didn't change much, but we just added the restaurant, bar, and daycares, which we previously did. So when does Silver Hill make sense? You may think, well, you guys are doing full doc just like a bank. Why should I send you a loan? Well, the reality is banks don't really like to do cash outs. And from looking at our portfolio and at our pipeline from years past, 2018 and 19, we were pretty much a cash out lender. About 50% plus of our loans were cash out loans. They were full doc loans, but people came to us because they wanted to cash out equity from their commercial property, where a bank or credit union will not do that. Okay. Some borrowers came to us because, the SBA, they were trying to do an SBA loan, just couldn't get there. Okay, paperwork, documentation, costs, whatever the reason may have been for not doing the SBA program, they came to us. Borrowers with maturing loans, and these two here bullet points are together. Borrowers that have maturing loans, whether at a bank or they have a hard money loan that's maturing. A lot of the people that came to us because A, they had a maturing hard money loan, B, they wanted to go from 10 to 12% down to our 6.5 or 7. Okay, as mentioned, we're no longer doing reduced doc or no doc, so that's scratched out. And finally, cash out. Cashing out equity is big. Working capital lines and loans are still more expensive than a mortgage on a commercial property. You're talking about upwards of 15% and 20% interest rates if you're doing those online business loans or the merchant cash advance stuff. All that capital out there, yeah, it exists, but it's a lot more expensive than getting a mortgage and cashing out, say, $50,000, $100,000 for working capital to grow the business, for payroll, to buy equipment, just many different reasons why a business owner would want to cash out equity in their property. Okay. We also get a lot of people that are looking to basically buy the property that they've been renting for a while. Some people are positioned to do that. I just saw one this week for a catering business that wanted to buy the property they occupy. So, perfect. That's a deal for us. So moving on into underwriting and other operational processes that change for us, we still try to keep the cycle as short as possible. We always like to say 30 to 45 days. An appraisal usually takes 2 to 3 weeks. And while we wait for that, we do all the other work that's necessary. We do see some delays, related to documentation. Most of our loans close in a business name, and so as a result, clearing the business entity and understanding the business ownership takes some time. But really, we look at 30 to 45 days. Now that we're just building the pipeline, we can probably make that happen. But as we grow the pipeline and get busier, we're probably going to be closer to that 45-day time period. So, these basically are the 5 main steps. Once we accept an LOI, that means, we sent out letter of intent, terms and conditions. We got it signed up. We consider that an accepted LOI. And then the borrower paid for the appraisal, and we're off to the races. So that's where our process starts. You get a conditions update. The file goes into underwriting and review, and then it's the final underwriting to clear. Okay, and then hopefully we have a smooth closing. So many of you that are on the call may have used our pricing calculator. Right now it's under construction. We're basically building it back up with new terms. We should have it ready. Zach, do you know? Because Zach heads that up, so that's why I'm asking.
Yeah, no, I think it will be ready pretty soon. I would say probably just a few weeks as we fine tune how the formulas work in that calculator. So for now, yeah, the best way to get the fastest pricing information is probably to talk to your sales rep, your regional manager. But we hope to have that back as soon as possible, because I know it makes it easier.
Yeah. Thanks, Zach. Guys, the pricing calculator was one of the few out there for the commercial business, where you can get pricing, at any time of the day online. So once we have that, it's a great tool. Usually what would happen is folks would run pricing and then have questions around a loan and then be able to contact one of our reps. So it's probably still going to operate that way. But as Zach mentioned, for now, just reach out to your rep for pricing. We're also going to work on our rate sheet pretty soon, so they'll be able to send out a rate sheet to you as well. So notable changes, deposit fee. We're not charging or collecting, I should say, a $500 deposit fee at LOI. Okay? So we were collecting $500 deposit. This deposit will go towards closing costs, and it basically was a good faith deposit in that, people were going to move forward and work on the loan with us. Okay, so we've done away with that. What has replaced that was that, before we used to take a lot of the appraisal risk. We used to go and order appraisals and pay for them ourselves up front with the hopes of, funding that loan and collecting the rest of the appraisal fee on the back end. Well, we've had to change that, and the reason why is there's different reasons why. First of all, obviously bearing the cost of an appraisal without a guarantee that the loan's going to close is a very high risk proposition for a lender. Okay, we're not in the business of owning appraisals. We want to do the appraisal and get the loan closed. But beyond that, we did have some issues with borrowers and their commitment. A lot of times people would put up $500 and they weren't committed to our loan and would walk away. And many times would request a refund even. So we feel that, with more skin in the game, people will be more committed to our product, more committed to our process. And we feel that that's more of an industry standard at this point going forward. So that is how we're going to move our process going forward. So the way it will work, we would issue an LOI to you. The borrower would review it. You would review it with the borrower, get buy-in, and then that borrower would pay for that appraisal up front. They're going to range. If you've been in the commercial world, you know that appraisals can range between $1,500 and up to $3,500, depending on the property type. For 1 to 4 residential investment property, that number is going to probably be between $500 and $750. Okay, so that amount will have to be paid up front, and all documents received per the checklist before we start our process. Okay, so that is one big change that we've made to our process. No deposit fee, but folks have to pay for the appraisal up front. With regards to doc submission, we talked about this previously. Once the loan hits processing, there will be an intro letter sent out with a link to our portal. And that portal, you'll create an account, and basically you'll be able to upload all the conditions so that your processor can review it through that portal. So no more need to email or send Dropbox to processors or anything like that. You'll be able to upload all of the documents on your checklist from that intro letter through that portal. So it makes life easy. We can track it. We know when we received it. We know when someone looked at it and worked on it. So there will be no mistake about, if somebody's out on vacation or somebody's sick, that nobody's read the document. The document's going to be in there, and it's going to be available to all internally for us to review. So we're real excited about this. And eventually we're going to expand this broker portal to the front end, to the sales process, so that when you submit loans in to one of your reps, your file will be created as soon as you send it in. Okay, so we'll have a file for you. All the documents will be there. There will be no reconditioning or saying, hey, I misplaced this document in my email. I can't find it. Can you send it again? So that problem will go away. So that's why we talked about being more automated going forward. This is just the beginning of that automation and making us more efficient, and being able to, be more transparent with our brokers, with our borrowers, and be more transparent with our process itself. Finally, some calculations: LTV maxes, debt service coverages. We are looking for higher credit scores. So the lower the credit, the higher the debt service requirement will be. Okay, and obviously the pricing will change as well. This is typical for other lenders. What we've seen out there is the relationship between FICO and debt service and LTV. Prior to this, we only looked at the relationship between FICO and LTV. Now we've just added a layer, which is debt service coverage. And as I mentioned, we're going to really be looking for higher credit scores and properties that are cash flowing, at a better, more stable and stronger level going forward. So getting started, I think Zach has another question for us. Zach, you want to take over for the question?
Sure, thank you. Let me set it up right now. So basically, we're asking, now you've seen us, you've seen our slides here, how you've updated our program. I've seen your questions, your comments throughout this presentation. Somebody saying, hey, I have been doing commercial deals, or I haven't been able to. Glad you're back. So help us out here and let us know. Are you seeing commercial deals now that you can't close because of lender inactivity? Has this been a source of frustration for you this year? And if so, I think us coming back will be very helpful. So I'll give you a few seconds to answer here. And as a reminder, I am seeing the questions, and I'll try to send as many over to Juan toward the end of this presentation as possible. So thank you. I'll give you a few more seconds.
Yeah, and with those questions, Zach, what we'll do is we'll get them out to our reps, and our reps will follow up.
That's a great point. I'm getting quite a few questions about specific deals and things like that, and so we can farm those out to the specific rep who would be able to help you much faster. So anyway, Juan, I think we can close it now. We've got 75% of our audience saying that they are seeing deals that they cannot close because of the situation we found ourselves in 2020. So telling.
Well, that's great news. Great news. I don't know if we'll be able to help you guys close 100% of those, but if we can help you close 25 to 30 to 50% of them, I think that will put a lot more money in your pockets, and you'll be able to continue to get your business growing. So while we're not looking to solve the problem entirely for that 75% of our audience, maybe we can increase your revenues by 30 to 40% by you being able to offer our product and us being a good capital source for the kind of deals that you see. Okay? So getting started, as I mentioned, our team will be a bit smaller than it was before. We've made some changes, and so we wanted to put up the map. This map is on our website under Contact Us. So you can see if you have a deal, you can go to the map on the website. You'll have those folks' emails and phone numbers where you can reach out to them right away today if you have a deal. Later on tonight, whatever you'd like. Okay. So one thing I just want to bring your attention to is the states in gray are states where we do not lend. Okay. So we don't lend in that upper northwest territory. We don't lend in Nevada. We don't lend in Hawaii. And we don't lend in West Virginia and Tennessee or in Vermont. Every other state, we're doing loans. And last time around, all the way up to March of this year, we had closed the loan pretty much at least one in every single state where we're eligible. Okay, so we can lend nationwide. We do like to keep our properties in more urban and suburban areas. We do stay away from rural property. So our cutoff usually, which is usually, a guideline that we talk about, but our cutoff usually is we won't look at anything that's in a county of less than 200,000 population. Okay, so that's critical in looking at the states now, as we look at the map, to understand, more or less where those properties should be. Okay, every state has, a bigger county. Some states only have one or two big counties, right? But the idea is we stick to urban and suburban areas and stay away from rural property or land or agricultural zones. Okay. So here are folks. These are our regions. Reach out to them. If you have questions, if you have a loan you have to review, you want to know if we can do it or not, or if you want pricing on a loan, these are the folks you need to be calling. Some of you probably already work with some of them. Some of you have never worked with us. So, I would encourage you to reach out, have a conversation, start a relationship with us. And, maybe you don't have a deal today, but maybe you have a deal in a month or even 90 days from now or 6 months from now. And if we can provide an option for you or even help guide you in the right direction as a broker, that's what we're here to do. Okay, that's our job. So, reach out to us with any questions on the guidelines, on pricing, and we'll be more than happy to help. And again, you go to our website, you go to contact us, you pull up that map, and if you hover over the state where your property's in or where you're located, we can find you the right rep to work with. Okay? So, Zach, that's all I have. Today was a short one. We will do one of these every month, guys, and every month we'll spotlight something different about our process, about our product. We hope to evolve our program, our platform, to allow more states, more property types, and even some different documentation types. So, Zach, thanks for coming back. It's great to be back on with you, and we look forward to our next webinar next month.
Great. Thank you, Juan. I have a few questions here. Quite a few. We have a few very specific questions that we've taken note of and we'll pass on to your sales rep, who will be happy to walk you through the specifics for. I have some general ones here, Juan, that you may be able to help with. First off, and some easy ones. Will this presentation be available? Yes. I will upload it to YouTube. I will provide you all with a recording link so you can watch this again. And so we will have that out to you tomorrow through email. So you can count on that. Some of these questions have me on the hot seat, Juan, about the pricing calculator and a pricing rate sheet. As you said on the presentation, those are top priority for us because we know how important they are for you. So we're working with files, as you saw with some of the slides there. The matrix will be a little more complicated in some areas because of that added DSCR component. So we're updating the calculator as well. I have a question here. When will I know that it's been updated? We will send this out through email, but I imagine too your sales rep will be very happy to share that information with you. Sorry. So Juan, I have a couple here, if you don't mind. One here about, okay, what if, so I have a few questions, Juan, from brokers who had a deal in process earlier this year. What should they do if they're interested to know sort of the status of that? Maybe an appraisal was ordered. Should they follow up with their rep to check on the status of that? What might be the next steps? How would you suggest they move forward?
Okay, yes, great question. And we did have, we had about 300 loans in the pipeline when we stopped in March. So yeah, they should reach back out to their account rep. If they cannot get in touch, they can reach out directly to me. My information is up on the screen, and we'll get you going. With all those loans that were previously in the pipeline, what we're doing is we're running them through our new model and through our new guidelines. They have to fit in order for us to do a loan. With regards to the appraisals, we will try and revisit the same appraiser and refresh the appraisal. We will need a new inspection because it's been more than 6 months for most of these reports. So that's the process. But yes, we're definitely interested in looking at that pipeline again and seeing what we could offer those folks, assuming those deals are still out there. Okay? So reach out to your rep. If not, reach out to me directly, and we'll get you going.
Great, thank you. I have a few more here. One question that I know you've seen before. It said, if I work with a rep in the Northeast but working with an investor on the West Coast, do I contact a rep on the West Coast, or should they communicate with their rep that they have an existing relationship with, no matter where the deal is?
If you have an existing relationship, talk to your rep. If not, you can reach out to me directly, and we'll get you with the right person.
Right, and I've gotten a few questions from people who aren't sure maybe if the rep is there or has moved. I know we have a standard email address, info@Silver Hill Funding, but I guess if people are unsure, you would ask them to contact you or to reach out to our general address so that we can connect them with the appropriate person, right?
Yeah. Just reach out to me, and we'll get you to the right person. We've had some staff changes, and so we're reallocating, moving people around, and reassigning some contacts. So, I'm usually in charge of that. So reach out to me directly, and I'll help you out.
Okay. So, when we have some questions about DSCR, about specific scenarios, and so I think if a question goes beyond the basics that you find on the rate sheet, would you recommend that the attendees on this call contact the regional manager to walk through those specifics?
Yes.
That's the fastest way to get the information?
Yeah, definitely reach out to your reps so that you can discuss those details and those particulars on certain deals. Absolutely.
Okay. So, like I said, a bunch of other questions. We have notes of them here. What we like to do is we'll try to connect you with someone who can answer that question for you as fast as possible. We know that's important, and we really do appreciate the time to attend and also to ask a question. It means a lot to us. So, Juan, with that, I think we could probably give these people back, 20 minutes of their day. For me anyway, thank you so much for joining, everyone. We're really excited to be back and really happy to connect with you. I see some very familiar names here, and it's just great to see. So thank you again. We'll be in touch with you again very soon. Juan, anything you'd like to add?
Nope, that's all, folks. Thanks a lot. Take care, and we'll talk to you soon.
All right. Bye, everyone. Have a great day.